We're here at the Great Lakes Crop Summit. I'm Jim McCormick, agmarket.net. Jim, let's talk about kind of what's been going on with the stock market and the commodity market. There's some chatter about moving money from one side to the other. What do you think about that possibility?
We're definitely seeing money come in. It's really kind of interesting. What we've seen the last couple of weeks is you're seeing the fund money coming in buying the deferred contracts. When anybody deferred, not the Dece 22, they're buying the December 23 corn and the November 23 corn. We're seeing big block orders, which tells us the institutional investors are bringing money into the commodities. It's a way to play the inflation hedge, and that should be a little bit supportive. You'll get waves of support when that money comes in, it backs off again, and then we're seeing more waves of it. So that's a positive sign for agriculture prices.
So from a farmer's standpoint, and I'm looking at prices, and they're pretty decent going into spring planting here, what does this tell me about what to expect, or does it tell us anything?
Well, I think what it's going to tell us, I think it's going to be a very volatile situation. And, you know, we're getting an opportunity. This money is driving the prices higher. So the December 23 is trading at contract highs. So you're getting opportunities now to lay off risk, both on the 23 crop and the 22 crop. And we'd encourage producers to do it. You guys have laid out a lot of money for fertilizer and all input costs. If something would go wrong in the world economy, something goes wrong in Europe and the economies of the world weaken on that, you don't want to miss this opportunity. You've got a golden opportunity to lock in profits, and this year and next year, don't let it slip.
We don't want to lock in our input costs and not lock in our corn sales, right? I mean, or soybean sales, or right?
Because you've locked in that high cost, you want to make sure you locked in the revenue to pay for it, plain and simple.
Yeah. From an inflation standpoint, the rest of 2022, do you think this tamps down or eases up a little bit, or no?
I think it's going to ease up a little bit. I do think it will slow down a little bit at this point in time. The consumer spending, their disposable income's dropping. We had a huge stimulus last year. They got a lot of money. They went out and spent it like crazy. Now with inflation going up, their disposable income's going down, so they're going to get tighter fisted on money, which that will hopefully control that inflation, as well as the Fed raising interest rate. That'll also hopefully tap it down a little bit.
All right, Jim. Appreciate the insight as always. Thank you so much. We'll be back with more Ag Day and a check of weather coming up in just a minute.
To contact Jim McCormick at Ag Market, call 844-4AG-MARKET or visit their website at www.agmarket.net.